All right. What's up, traders? What's up, tycoons? Super excited for today's video. We're going to go over the graph protocol, give you guys an update on ticker symbol GRT. We were tracking this 1, 2, 3, 4, 5 bullish structure, but rather than getting the fifth wave and getting continuation and another impulsive move up, we have been consolidating, but ultimately we're going to be bearish below this last level here. I'll go over that and break down why. We'll also take a look at the MACD and how you can use this to spot potential entries and exits for trades. And we're also going to go and briefly talk about the graph protocol, ticker symbol GRT, and how they're using AI to enhance the graph network. AI is currently the next bubble, all right, and the bubble is just forming, all right. Chat GPT came out late in 2022, and ever since then, AI has been taking over really everybody's attention. And it's going to be the next bubble, okay? But that bubble is just starting. It has not popped yet, and so I'm paying close attention basically to a lot of AI related things right now. So we'll dive into that a little bit deeper and go into an article of how the graph unlocks a new Web3 use case, organizing off-chain data. All right, but we're also going to go over today's sponsor, which is the Tangent wallet. All right, if you don't know by now, you want to get your money off of these exchanges. You want to get your tokens and your coins off the exchanges. If it's not your keys, it's not your crypto. And we've all seen what happened with FTX as well as many other exchanges. You can't really trust them. So we'll talk more about them later. All right, before we move forward. All right, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involves significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. We'll go ahead and hop into the chart now and go over what I'm seeing on the daily time frame. Now, as I mentioned, we were looking to see if we were going to get a 1, 2, 3, 4, 5, taking us up to that 26 cents area on GRT. But rather than getting continuation, okay, we've had a long consolidation period, right? And really just respecting a lot of the major levels. We're rejecting the 38.2. We're bouncing off of the 78.6. And the reason it says bearish below here is because there's three stages, or really there's two stages, to the reversals, right? There's the trend continuation, and then you get the reversal, right? And so you can use the fibs, which are what all of these levels are right here. We have the 38.2, 50%, 61.8, and 78.6. And we're using those to identify, are we getting trend continuation or are we going to get a trend reversal, right? Because that's what the fibs do. Nothing moves in a straight line up and nothing moves in a straight line down. Rather, you get a move up, a retracement, a continuation of the trend. And that would be that 1, 2, 3, 4, 5 that we are looking for. But you can also use it to spot reversals, right? If you move up, you retrace, and you start to consolidate and break through those major retracement levels, that's how you can spot a potential downside reversal to our previous lows, if not even lower, to some of the other lows, right? And so you can see that, we had the 1, 2, 3, right? We moved up, we retraced, then we bounced and got the bullish wave, and we came down and retraced. But rather than getting that continuation, we are in that consolidation phase, right? So it doesn't mean that we have to get a reversal, okay? But we are increasing the odds of a possible reversal, right? We really need to break out above to see that trend continuation. So for right now, 0.1715, 0.1528, 0.1341, and 0.1074 are going to be all of the major levels to pay attention to. If we flip 0.1074 to resistance from support, then that's when we have an increased odds of retesting some of our previous lows. Now, I mentioned the MACD. Okay, and you can actually use the MACD to spot potential entries and exits. If you take a look here, what you want to pay attention to is this red line in particular. So when it crosses above this yellow line here, that's typically known as an entry signal. And you can see here that we had a very strong push to the upside afterwards, right? And when it crosses below this yellow line here, that's typically known as an exit signal. And we got the exit signal right in this time period. We had a strong move to the downside, right? And then we came back, retested our 78.6 retracement level here. Okay, and you can see we bounced off of that level, and then we got a MACD buy signal, right? Again, where the red line crossed back up above, and you see we had a strong push up, but we rejected our 38.2% retracement level, okay? And over here, we had the red line cross down below, again, rejecting that 38.2% retracement level. We had another move all the way down to the 78.6, and most recently, we just got another crossover, okay? But take a look at the previous time zone we've gotten a crossover. We really created some distance and some space in between the red line and the yellow line. And here the red line is hugging the yellow line very closely. So we're not, and if you take a look at the candlesticks, we're really consolidating in this range right now. So rather than seeing a strong push to the upside as we did in the past over here when we got a nice entry signal, and over here when we got a nice entry signal, we moved up and we started consolidating. Right now, you could call this bull flag consolidation, and you would look for a move up to about 0.1528 if we do get a bull flag breakout. But for now, we really want to see the MACD actually create some space in between that yellow line and give a strong buy signal rather than just crossing above and hugging that yellow line very tightly. Okay. So when it comes to the chart, that's pretty much all the major things that I'm looking at right now. Now, I mentioned we're going to talk a little bit about the graph, okay, and the graph protocol, and how they can unlock a new Web3 use case, organizing off-chain data. So we'll go ahead and get into that real quick. And they can, something that they're doing, okay, is creating Web3 data pipelines using the graph and on-chain data. So let's dig into how to use the graph to publish and serve open source dynamic data on blockchains and perma-web storage. With this method, you can reliably and affordably index and serve data to third-party consumers. Decoupling the publishing, indexing, and serving of data minimizes development operations expense. Plus, by using the graph's decentralized network, access to this data remains robust and reliable without requiring any additional effort on the part of the data publisher. The approach consists of all of the following components: an off-chain cron job that performs complex computation and posts data to a perma-web source indexable by the graph. Currently, this can only be done with IPFS using the network support for file data sources, which can be extended to Arweave or Filecoin once the protocol adds indexing support for file content on these protocols. The cron job should produce an on-chain transaction that posts the file hash and any desired metadata, whether that's the time, topic name, etc., ideally using a gas minimized data edge contract that performs no computation but persists the IPFS hash. Developers can reuse the data edge contract edge and node has already created for this purpose. OpenZeppelin and Autotask make this easy as an API call. And also for publication of a subgraph that indexes IPSF files on the file hashes posted to the chain. So to give an example in the graph ecosystem, Edge and Node recently produced an oracle to publish and serve network cost and quality of service metrics using this method. Every 5 minutes, the oracle posts aggregated quality and cost of service data from available gateways to IPFS, and it posts the IPFS file hash to Gnosis chain via data edge contract. These IPFS files can then be indexed in a subgraph, which can then be consumed by protocol stakeholders. For example, one can reference this subgraph refro built by Juan Manuel Rodriguez de Fago of Graph OPS, which parses data from the IPFS files and stores data values in the indexer database. You can read more about this particular implementation of Oracle Subgraph Pipeline in Edge and Node developers' documentation. This approach allows us to minimize DevOps overhead while making data available to community members such as DApp Looker, empowering them to build useful tools with a dependency on the data publisher to host and maintain a proprietary API. An example given would be 2 dashboards on the DApp Looker team build based on the equality and cost of service subgraph, gateways quality of service dashboard, indexers quality of service dashboard. Okay. Now, when it looks at the costs, okay, this workflow can be implemented at very low cost. Below are the costs associated with the quality of service Oracle, right? And so the Gnosis chain data edge contract transactions are $1 to $2 per month on Gnosis chains for around 10,000 transactions. And that's not a typo. It's actually $1 to $2. Now, IPFS node pinning subsidized independent SaaS options starting at $20 a month with free tiers for simple/low volume usage. And serving is going to be at $0 for the publisher with query fees paid by data consumers. The costs are set by index market based on the complexity of the subgraph and the volume of queries. Prospective users can see how much current users are paying for different levels of query volumes per month in the spreadsheet. Now, exploring new Web3 use cases, there's dynamic data from an Oracle serve via the graph could open up some interesting new possibilities for perma websites, including blogs and content hubs with lean, cheap backends. Now, you can offload a blog's content hosting to IPFS and feed your front end with the blog's content by using a subgraph. Content publishers could host a blog using ENS by periodically posting content to IPFS and chain using this method. The front end code for the blog would use a subgraph as a backend, and would remove the need for hosting, server maintenance, or DNS domain name registration. The publisher would only need to have a loading billing balance to pay for queries based on the site's traffic. Depending on traffic and frequency of updates, this can be done at a variable cost of around less than $1 a month. So that pretty much wraps things up for the graph. Now let's talk about today's sponsor, which is Tangem. Okay. And as I mentioned, you want to get your money off of the exchanges and onto a hardware wallet. Now, Tangem actually looks like a regular credit card, but unlike other hardware wallets, it functions without any batteries, wires, and connectors, which is something that I really like. Now, Tangem is sold in packs of 2 or 3 cards, and the additional cards are used for key backup, which is a really great option, okay? Because other hardware wallets typically do not have a backup option. So, if, we've all heard those stories of people who bought Bitcoin a very long time ago, and then they lost their hardware wallet. And, now it would be worth millions and millions of dollars, and all of that cryptocurrency is gone, right? Well, with Tangem, you can help prevent that by having the backup option. The setup time is also very, very quick, right? It typically takes about 1 to 3 minutes. It literally only took me about 2 minutes to get mine set up, right? It's super easy to use. You just have to scan and activate, set up the password, and you guys can start making transactions. What you need to do, okay, is download the app today on the Google Play Store or the Apple App Store. And when you go to make your purchase, go ahead and use code ZACHLY, that's ZACHLY, and that will get you a discount on your purchase. Now, the price point is also much more affordable than some of the other hardware wallets out there, costing north of $100 a piece. Tangem comes in at a very affordable price point and is also very stylish and new looking. Okay. Another great feature is that it's completely waterproof compared to some of the other ones, which are not. Okay, so you don't have to worry if it gets completely submerged in water. It's also freeze proof and temperature resistant. So you can actually, and people have done it on YouTube, they go out and they completely freeze their card, and it still does function. It still does work. What's also really great about it is that it's DeFi compatible. You guys can exchange, buy NFTs, make loans and deposits in more than 100 different decentralized applications with the help of Wallet Connect. And it's compatible with over 2,700 cryptocurrencies at the moment. And they're building upon that all the time, right? Really working to progress that. So appreciate you guys watching the video. Smash that like button, subscribe to the channel. Download your Tangem app today on your app store, and when you go to make your purchase, use code ZACHLY. That will help support the channel while also getting you all a discount.